Look, this thing's a wild beast, and I have no ability. I really have no ability to predict its price. But I'll tell you what I am good at as an investment guy. I look at pattern recognition, and patterns tend to repeat themselves. So I sensed it would go on a run, and then I sensed there would be a big correction because that had happened 5 times before. That's not like some genius on my part. That's just pattern recognition, right? I was a little. I'll tell you what, it was very sad to me to see some people. I thought Plan B did a very big disservice to the Bitcoin community, because what he did was he came in and he said, I've got this model. It's one model, and it says this is going to 150, no doubt, now, fast. And a lot of people, remember the stories of people who levered up and they bought a bunch of, they unleveraged, they bought a bunch of coins figuring it was this 50, 40, whatever, and it's going to 150. And then it corrects and they got blown out. And I just, when the whole Plan B thing was, all the buzz was going on, I was just like, guys, I don't know if that model's right. I don't know if it's wrong, but I don't think it's that easy. So I was a little bit skeptical, but I was buying some. I mean, what I do now, I continually DCA, shameless plug for Swan, because, I'm an investor and I love those guys. But, I just continually DCA at whatever price is available, because even 68 is going to seem cheap in 5 or 10 years. So I just buy some every week, a set amount.
Mm-hmm.
And, to me, it's compared to the 200-day moving average. And he looks at all the data points from the inception. It has only been this cheap. Last time I checked, it has only been this cheap compared to the Meyer multiple 5% of the time, which means on 95% of the days it's been out there, it's been more expensive than it is right now. So I think now is a pretty good time. If you're going to do a smash buy, I think 20,000 is a pretty good time. I mean, I also look at technical charts, and I could see it going down. I mean, if we get another March 2020 event where there's a correlation of 1 and everything gets liquidated, I could see it going down into the 14s. I think 14 is a hard bottom. I'm not worried about going below 14. Yeah. But honestly, I'm not sure it needs to go there. I'm not sure it will go there. I believe, it tends to go up between 5 and 10x on the run. So I think the next up move is 100 to 200. I mean, I like Max's 230 number, but honestly, when it gets to 200, I suspect it'll correct 60% off that. Now, 40% of 200 is 80 or something. So, so it comes back down to 40. I mean, and honestly, maybe when it gets to 60, 70, 80, 100, my DCAing, I'll lighten up a little bit for a while. All the assets that are out there, and like, what's the best thing to buy right now in this environment?
Well, let's talk a little bit about that, because Bitcoin has largely benefited from this QE environment that we've had for a long time that's coming to an end, right? And there are a lot of folks out there who say there's a new regime, essentially. The Fed is taking a much more aggressive stance. And it's really interesting to be on Bitcoin Twitter and then sort of just FinTwit in general, and people talking about something's going to break in the system that will force the Fed to pivot. It's almost like the street is waiting for that to happen, right? Because they're expecting the printer to go on again, but the Fed's like, no, that's not going to happen. We got to get inflation down. So how do you see this playing out?
Yeah, no, that's a great question. It's really the question of the day, and I'm preparing a speech for the New Orleans Gold Show that's going to address this. I also, on my Twitter feed, there's also a webinar that I recently gave for my investors on how we see this problem. So look, the Fed is losing it. I mean, we are in the end game of fiat money right now. I mean, they blew it. They completely blew it on transitory inflation. They printed way too much money. The inflation's running red hot, and they're scared. Okay, and they're starting. They're like a player in a game where they're losing, and they're starting to make stupid moves. Okay, and the move they're making right now is they're like, oh shit. I've said in the past, they're driving a clown car bouncing off the inflationary rail and the deflationary rail. Move, their credibility is going to be gone either way. But I think they'd prefer to have it be gone by, he said he wants to be Volcker. So he is going to hang on until something breaks. They're going to go 75 bips in November. They'll go another 75 after that. They don't give a shit. They've made it very, very clear. Even if it trashes the world economy and all our partners, our trading partners, have serious problems like England just had and Japan and Italy had, that they don't care. They're going to keep pushing rates up. Here's what they do care about, though. They care about the continuity and the integrity of the financial markets, and they care about things working. And basically what we saw, England recently is a preview of what happened. I mean, the English gilt and the English, the Great British pound just traded like shit coins, or like a small developing country that was having a currency problem. And this is a G7 country, right? I mean, these things were down, the gilt the yield on the gilt was up enormously, quickly. And I could show you a chart of that. And the pound was down enormously quickly. And they had to come in with enormous QE and reverse all their policies. That's going to happen to the Fed. Debt growing enormously. And we're in a debt spiral. This is Lavish's point. We're in a debt spiral wherein interest rates are going up relentlessly because inflation is high and not coming down. And as interest rates go up relentlessly, the amount the government has to spend to pay interest on its $31 trillion worth of debt is going up. Mm-hmm. And if we were at, let's say interest rates go to 5%, pick a number, they're at 4 now. And most of the debt's within 3 or 4 years, the maturities are short. So if interest rates go to 5%, you multiply times 31, you're at $1.5 billion or $1.5 trillion plus of interest expenses. 2 years ago, the U.S. government interest expense was $300 billion a year. Mm-hmm. Now it's running at close to 6 or 7, and it's headed towards that $1.5 trillion. That's going to totally blow out the government budget in terms of deficits. Remember, those deficits get funded by issuing more debt. Mm-hmm. Issuing more debt into a market that doesn't want to buy it basically shoves the interest rate higher. So what I'm describing here is a doom loop, right? And Lavish has described it very well as well. The interest rate goes higher, the deficit gets bigger, you got to issue more debt. Issuing more debt makes the interest rate go higher still, the deficit gets bigger still. And this is Hemingway's, suddenly and then all at once. And that was what was happening in England. And that's going to happen here. And in my speech at the New Orleans Gold Show, I'm going to lay that out. I mean, I am calling the shot. This is a Michael Burry moment. We are in the next 18 months, we are going to see the United States experience a full-fledged currency crisis. And when it does, the Fed is going to have to come back in. And they're going to have to say, damn the inflation, we're keeping these markets running. We will do whatever it takes. They'll do a Mario Draghi moment and say, we will do whatever it takes. And everyone will go, oh, I get it. They're going to print. They have to print. They don't have a choice. They don't like it. They don't want to have to do it. For all I know, Powell will resign or be fired when he does it, or they'll try and claim that they're saving the world, like the others in the past have done when they're doing it. But the fact of the matter is they will have to print. When that occurs, Natalie, what's going to happen is, and this is how I've studied all the hyperinflations in history, and this is in the past how it happens. When it becomes apparent to everybody that the Fed, you and I know the Fed is trapped, right? They've either got to print or the system's going to collapse. But we're in the minority of this country. I mean, you ask the average person on the street. I mean, heck, they'll pick a Hershey bar versus a bar of silver. I mean, we've all seen that video. Yes. Currency will fail. That's my belief. We will have extremely high inflation, perhaps bordering on hyperinflation in the United States. Now, they will fight that with everything they can. They will do yield curve control. They will maybe force us into putting our 401ks into government bonds. They will probably cook the books some more. They'll continue to try and suppress the gold market as they've done. I wouldn't be surprised if they've started trying to suppress the Bitcoin market, in terms of paper Bitcoin. I mean, I think the BlackRock getting into Bitcoin, I mean, it wouldn't surprise me if BlackRock was the first organization allowed to do a Bitcoin ETF instead of GBTC. And then in that ETF, BlackRock would be sucking up demand and then not ultimately buying the coins. I mean, I think there are all kinds of moves that the fiat world is going to make to try to keep itself intact so that they can continue their privilege. But I think the fact of the matter is that as events unfold, they're playing a losing hand and we're playing a winning hand. And so, they can talk as much as they want. The math and the facts are on our side. And so we're going to win.